Good morning, everyone. Thanks for coming to the panel on how do we measure social impact in investing? A fundamental question. And we're going to kick things off. Jean, you're the head of the Case Foundation. You're the chairman of the National Geographic Foundation as well.
Society, yeah.
The society, forgive me. Tell us about how you formulated a process, you formulated metrics for measuring this critical question.
Sure. Well, first of all, it's great to be here this morning and to talk about this. I think it's important in any conversation about impact investing to level set. What are we talking about when we say impact investing? And I think we say, well, there really has to be both a financial and a social return for it to qualify as impact investing. And we also say three things are needed, and that is intentionality, measurement, and transparency. We're going to talk about measurement this morning. We've really invested heavily in measurement platforms across the movement of impact investing. For instance, we did a partnership with B-Lab, which has a number of tools that companies can use to assess how they're doing along impact lines. And what we discovered was they had about 1,500 B Corps, but they had over 10,000 companies using their tools. And so it became really clear that there was an appetite and a thirst for, I want to measure, I want some frameworks for measurement. So we invested in a campaign with them together called Measure What Matters. And today there's over 40,000 companies using those tools. So, you know, we're looking for those platform opportunities that can put measurement tools in the hands of investors.
Marcelo, tell us about how you've approached this, this key question. I mean, you talk about how you wear a missionary hat and you wear a mercenary hat as well. Tell us about that dichotomy.
That's interesting. I've been bridging that gap for over 30 years, and I have all the scars to show. This has been early days, too early maybe, but pays off great. On the mercenary side, I created a venture capital private equity asset management company in London that just does sustainability. We don't have a sustainability fund. We only do that. We have an association with the Nobel family, as in the Nobel Prize, and a family of funds that does this around the world, globally. And we developed a tool to do exactly what Jean just said, a tool that has 30 different criteria, clustered, in 5 different clusters. And our investment managers will screen a business, a due diligence potential in an investment, and the sustainability committee will do the screening through our Earth Dividend, which is the name of the tool. And they have veto power over the boys looking just at the money. So the blend of that, in our case, is make good money, give good return to investors, above market even, with a lot less risk. That's the end of the day. If you only want to use the financial view, that's what it is. On the missionary hat, is I started a nonprofit development agency. We build economies in deprived regions in the world, and we use all those metrics from the beginning. Since 30-something years, we partner with some very large institutions, financial ones, the World Bank, the IFC, and banks and companies, corporate. And we've seen some very interesting cases whereby their risk, companies' risk, investments' risk, investors' risk have been mitigated by the actions they took. But the biggest beneficiaries of this was the people around those projects, because once we've made those investments on building an alternative economy for those people, using the financial lever that comes with those large infrastructure investments that usually really damage a region, it does exactly the opposite. But you need to manage it as you do the engineering side of a business like that. So
do those institutions that you mentioned that you work with, do they come into the equation with their own goals, objectives, their own metrics? And you have to kind of incorporate those into on a project by project basis?
Sincerely, no.
No.
Not yet. Some of them are beginning to move that direction. Some of them already do, in our experience. But the main thing they ask us to is to offer them and sell them the ideas and the concept of what would be the right metrics and what would be the right outcomes, positive ones, for what they have done. Because they do have a lot all of them have very bad experiences in the past.
Sure.
And that had hit their share values or bad press or all that.
Right.
So they asked us, and we've been delivering this consistently for many years.
Tanja, tell us about your Startup Bootcamp. It sounds like you're the hub in a vast global network of different types of campaigns and goals. Tell us about how you measure this critical question.
Exactly, I'd love to. So we are, Startup Bootcamp is a global network of accelerators. I particularly just had a 3-year fund focused on mobility and smart transportation and energy. And the interesting thing about that fund that has now come to a close is that I actually did not measure any social impact metrics on that. It was just super early stage investment in founders that were hoping to change the future of mobility, reduction of CO2 emissions, things along those lines. I'm about to raise another fund and go out on my own, where I want to focus a lot more on mobility and sustainability again, but learning more about all of the metrics that we're talking about today, because I find that on the one hand, we're trying to do something great for the future of cities and for logistics, but in reality, what we're doing is we're investing in startups that end up doing exactly the opposite of what we hoped. So you now have way more delivery trucks in the cities doing instant, within 1 hour deliveries, which is exactly the opposite of what I was hoping when I invest in other, companies that are carpooling and basically reducing the number of cars on the road. So it's a fine balance. So I'm really excited to learn more about impact investing, which is what I want to measure in the next fund that I'm about to raise.
Yeah, Ed, I think these two stories really reflect what we know, which is impact investing has an incomplete ecosystem. There are just gaps across really impact investing. And, we talked about measurement as a tool, but even data in many cases just isn't really where it needs to be. There's been a lot of good performance data around financial returns, particularly in the realm of private equity, that are demonstrating that there's market rate return or better. But generally across the ecosystem, when we think about what investors need to feel comfortable, we don't have a rating system. We don't have analysts looking at these things. There are not yet standards around these metrics. And even the financial reporting in many cases, there are many impact investors out there who are not sharing their data. So at the Case Foundation, we invested in an impact investing network map. It's a visualization tool, and any of you can take a look at it on our website, that literally maps what's happened in the impact investing movement across the planet. So you can search by sector, you can search by geographic region, you can search by area of interest, and you can look at who are the investors and who are the investees, and what other parts of the ecosystem are there and available for investors to know about.
So it's almost creating kind of a social network type effect for impact investing.
Yes, like any movement in the early days, I think we all rely on almost stories and who you know and connections.
Right.
And I was sitting on a panel for a few years in a row at the Milken conference in the US, and everybody said, what we really need is just some way to know who's out there. And finally, just in a crazy moment, I said, all right, we'll build the map. I had no idea that we were undertaking a 2-year project and a significant investment, but we're really happy that we did it. And we've heard from a number of family offices and investors out there that even just seeing the degree of impact investing going forward gave them, an increased sense of comfort that this is real.
What kinds of questions are philanthropists asking now as impact investing evolves, as you're putting together a map so we can see what this world looks like? Are the questions that philanthropists ask changing?
You're asking me? Yes.
The whole panel, we'll all weigh in.
No question that's the case. And we've actually seen, quite a turnaround in the case of foundations. And I would say they fall in 3 buckets today. They fall in the true believers who have been early to the game and are making real and big investments in impact investing, either using their corpus, their endowment, or using PRIs through their grants to basically make investments rather than straight up grants. Then you have the curious. They're coming along. We're working with them, trying to get them comfortable. And then you have many, and I tell this story routinely, who, particularly the chief investment officers, are stiff-arming it all the way. I mean, I had one chief investment officer, when my husband was visiting the foundation talking about his investment firm, pulls my husband out of the meeting and says, tell your wife to shut up and stop talking to our CEO about impact investments. So it really does range out there from those that are coming along to those who really want no part of this business.
I see. Let's talk projects, if we could. Projects that the three of you have worked on that showcase some of the ways that you're measuring the impact. Marcelo, perhaps you could kick us off on that front.
Sure. I'd like to mention something not from Earth Capital Partners, is from the early days of Pronatura, our foundation. It's we were asked by Shell to look into a potential investment they're going to make into an area which is the following: 300 by 300 kilometers without roads, the highest biodiversity in the world, Peruvian Amazonia, 38 Indian tribes, 4 uncontacted. When he described to me, I said, listen, this is set up for the biggest disaster you could even think.
What's the timing here? What year was this?
This was mid-90s.
Mid-90s.
Mid-90s. Okay. At the time, Shell had Brent Spar hovering over their heads, and Ken Saro-Wiwa had been hanged, and they're being blamed for it.
That's in the North Sea, Brent Spar.
The North Sea Brent Spar, yes. So they had enough bad press on their minds and their hands to be scared. So they said, well, the question was, if we go in business as usual, will we have the problems we had in Nigeria 60 years from now in this context? And I said, no, we don't have to worry about 60 years from now. We should worry about 3 years from now. That day, Shell was the highest market, that was the biggest market cap in the world that morning in FT. So I said to Mark, listen, he was the chairman at the time, he said, not even, anyway, but he was in Olympus on Shell. I said, listen, you're going to go into history if you do business as usual in this one. Because you're going to go into the history as the guy that bankrupted the biggest company in the world. How's that? Then we went on a long dinner, discussed, and they decided to buy the concept of preparing the grounds and doing going the last mile to do it right. Long story short, Shell left the project 5 years later because of pricing dispute with Fujimori at the time in Peru. And 2 other companies rebidded and won the project, not as capitalized as Shell, a Nigerian, Algerian, and another Argentinian company. They ran the project. They were forced to take on the same philosophy because the culture that was built over 5 years was so strong that government or the communities wouldn't let them into the field if they didn't comply with what had been planned by them. The final program after 5 years was a 50-year economic development program for the communities. So they bought into that, and they wouldn't let them work. So they brought us back.
So that was the key measure for impact then, was that economic development program?
Yes, there was, but there was a consequence to that. That saved the project at the end because 10 years later, we came back and continued the process. 10 years later, they ran out of money, and they tried to refinance. No one would. But at the time, 10 years later, the former Minister of Energy and Mines of Peru, that was then following the whole process of implementation and finally got it and blessed it, was at the board of the IDB, the Inter-American Development Bank, who then argued that the project should be refinanced, and it was. So it was, funny enough, the project was kind of a refinance because its approach to social and environmental impact, and today it's responsible for 44%, I think, of Peru's energy.
Very good.
And it's the biggest success in the sector, I think, is the benchmark.
Good. Are there projects that you would like to highlight that kind of surprised you with how they...
Sure. I think there are projects, but there's also almost a framework I will bring to it, and that is that I think around measurement, you really need an e-harmony moment between the investor and what you're investing in, and a clear understanding that the intention of what you're looking for is there, and a commitment to measure and report the returns. So I'll give you a few examples of how we've looked at it. Some number of years ago, as social media was just first coming onto the scene, we were really excited about the potential to use technology to democratize philanthropy, to allow micro donations and sort of mass giving levels. So we invested in 3 companies that had platforms that enabled that. We put about $4 million of investment into those platforms in the very early stage. And what we were really looking for was to unleash giving by the masses. that $4 million we invested today has turned into over $5 billion of micro donations across those three.
$5 billion.
$5 billion. So we call that a really good return on investment.
Indeed.
There are other ways. We've used some collaborative approaches where we have done loan guarantees. So, for instance, in Africa, where sometimes the development money that flows isn't on a sure schedule, if you're trying to get some things out on a routine basis, you can be cash strapped and have to stop if the development funds aren't flowing. So we put loan guarantees in place, for instance, for malaria bed nets that allowed them to continue with a smooth production. We backed the loan that they got, and then, of course, the development money eventually came, but it enabled literally hundreds of thousands of bed nets to go out and production to be maintained. In that particular case, what we were looking for in the social impact was how many more bed nets were able to be distributed as a result of our investment, and we felt really good about the outcome.
Sounds like you hit that target.
Yes, we did. We actually exceeded the target.
Exceeded the target.
Yeah.
Excellent. Has loan guarantees become a very important part of your approach now? Is that?
Yeah, I think it's a really, it's not an obvious tool to investors or to philanthropists.
Right.
But it can be really, really powerful. And it particularly can be powerful for nonprofits who often can't qualify for debt, but can if they have somebody standing behind them to guarantee the loan. And we've done this a number of times. We've never had a default. We've never really been, had the loan called. And in fact, there's a consortium being built of foundations that are going to come together to do large-scale loan guarantees. We think it'll really move the needle on impact in some areas.
I cover fintech in London, and one of the big themes that I write on is how technology has enabled small companies, entities that don't have a lot of credit or don't even think to ask for credit because it just seems impossible. And by using the web, even by using mobile, all of a sudden they're able to qualify for kinds of financing that never was there before. And it strikes me that that's probably a very promising avenue when you look at things from a philanthropic point of view.
Yeah, no question. We also focus on what we call inclusive entrepreneurship, and that really speaks to entrepreneurs who come from non-obvious places. So we look at it geographically between the coasts, because today most venture capital, 78% goes to New York, to Massachusetts, and to California in the United States. So the other 47 states have to fight over a quarter of the pie. 90% of venture capital last year went to men. If 50% of the population shared 10% of the capital in the United States, and only 1% went to African American founders. So some come to that from a social justice standpoint, but we come to it with an innovation lens, because we know that entrepreneurs live problems and they build companies to solve the problems they've lived or the challenges and opportunities they see. So by bringing more, many more segments of society, lower income, et cetera, coming in and playing a role, I think we'll see all kinds of new products and services as a result. And going to your point, many of them are turning to Kickstarter and to other places because they don't come with tens of thousands of dollars in friends and family financing that the elites often have to get their companies started. So, things like these platforms really provide more of a democratization of entrepreneurship as well.
Yeah.
This is, if I may, this is something that I struggle with as well. So in my previous life, when I ran a family office, we would invest in any kind of fund-of-fund and social venture funds. Right now, I've got this amazing founder that was part of my 2014 batch who just really wants to bring entrepreneurship to Africa and basically turn tiny villages and people that walk, 30 miles a day to transport water back and forth to their villages into entrepreneurs. And he does this as a single founder, and he's the one founder that I kind of love the most with his offering, and he's not getting any funding. So what he's trying to do is he's trying to bring retrofitted e-bikes from China, retrofit them for the African market with potholes and muds, and put solar panels on them. He's integrated M-Pesa, and he's basically allowing African entrepreneurs to become more effective by generating business. And he's the one and only founder in my cohort so far that is having a very hard time raising money. And I don't know why that is. Maybe I just don't know the right platforms. But I find that such a shame, and it's such a beautiful vision this is one of the many sort of, early stage founders trying to make a difference on the planet. So.
Yeah, I think it's a mixed bag in Africa. I mean, we went across Africa looking at the entrepreneurial ecosystem. And, what we saw was really, some really good places with deep and rich, roots around investing, et cetera. I mean, still early days, but deep. And then some places that were deserts. And, so we felt really good about, obviously, Kenya, which many have known. Right. I mean, great accelerators and incubators there. Lagos, Nigeria, that Nigerian hustle they talk about is alive and kicking there. And we're just blown away by some of the products, going back to your friend with the bike, some of the products that people were envisioning and building that have application globally, right? In so many other markets, even in our country of the United States. Appalachia needs some of the products we saw in Africa, and Indian reservations need them. So they really can build global markets. But the wonderful thing I think we're seeing across the globe is that people from that country are building solutions for their country, but the potential goes way beyond those borders.
I think I've heard two very important words here, I mean, amongst so many. Scale, platform.
Right.
We've been working for 15 years with the IFC, which I think 30 years from us plus 100, 70 from them is about 100 years of experience. And they have a wealth of experience because they are a financial institution, they are a private financial institution, but they're controlled by the mother, World Bank, which mandates them a big mandate for sustainability. So in our experiences, we've been building something for 15 years now, and we're launching this in Mozambique as we speak. Somebody has his boots dirty, which I really envy. I would love to be there, but I'm happy to be here actually right now. But it's a platform, it's an operational and a financial structure platform to do exactly what we're discussing here, deliver it at scale. And the scale we're looking at Mozambique is 8 million people, the 3 northern states that are about to receive $30 billion investments in natural gas exploration, which will destroy the place if business as usual is taken. Or will use that lever to really bring something and accelerate something in a much nicer way. So that's our bet. We're betting this is going to happen. The government is completely on our side, companies as well. So, I mean, the stars look like they're aligned. We're doing this in Nepal, Peru, Brazil. Those are the 4 pilots we're using for applying this platform right now. We're going to launch it and announce it in January, February, for Q1 next year. It's very interesting. And
well, I think we'd like to open it up to questions from the floor, but before we go to that, I'd like to get your perspective on the other stakeholder increasingly in these projects, and that's the governments themselves, the states themselves in dealing with officials. Are there any kind of large trends or shifts that have really surprised you in the last couple of years?
Sure. Well, you may know that a couple of years ago, the G7 had an impact investing track that they used at the summit. And essentially, the 7 countries had country task force that were assigned to look at policy and look at regulations that could advance impact investing in their country. So I served on the U.S. task force for the G7. And we put together a number of policy recommendations and didn't just stop at policy. We used the moment to go out kind of across the industry and ask people to make new impact investing commitments to come alongside the policy changes we were hoping to see. So we announced the report at the White House and a commitment of $2 billion in new impact investments that were going along with it. And what I can tell you is the 3 major policy recommendations that we made have all since been adopted, and we're tracking and measuring the $2 billion. Duke University is playing sort of the convener and coordinating role there to track and to measure if those impact investments have gone forward. So I still think we're very, very much in early days, as we've talked about here, and there's a lot more needed. At the same time, I've truly been blown away by the traction I've seen even in those 2+ years since we did that work. And I was just giving you a U.S. story. The stories are equally as impressive from the other countries that participated.
Are there any questions in the audience? This gentleman in the front here.
Recently, Thunderbeam was able to raise, well, they didn't raise, but they helped small companies raise $5.8 million through blockchain-powered funding. using blockchain to allow people to effectively invest in small businesses in kind of a stock exchange kind of way. How do you see blockchain disrupting the entire funding model? Because surely, everyone is able to invest in small businesses and get out whenever they like. Doesn't that disrupt the entire VC practice as it stands?
Do you want to take Tanja?
Well, I think it's going to have a huge impact. I can't wait. I think that's phenomenal. But who knows if that's really, who knows how VCs are taking this whole thing up, right? It's funny how the whole discussion is. I think venture capitalists don't take ICOs or Bitcoins or any of those kinds of, options to invest seriously at all. But I think there are some that are going to make a huge difference. And I think it's amazing to empower people to do that. So I'm thrilled about it. I'd love to hear.
Can you just elaborate just a little bit on that? What facet of blockchain technology do you think can make this turn that you're describing?
I don't know enough about the detail of the blockchain, which facet of the technology. I think it's just the concept that everybody can invest very easily.
So the crowdfunding ability of ICOs and so forth. Okay.
Yeah, kind of taking out that middle layer. It's a hugely disruptive force. And, we are seeing it in investing, but we're also seeing it in philanthropy. I mean, some of the largest NGOs in the world are, doing some blockchain work, and it's amazing the difference it's made in some of the countries. So I think it's hugely disruptive, but I also think, whenever I'm lecturing in the business school, look, we just need to reimagine things. I mean, some believe capitalism is broken because we have a situation where it's benefited very few, and, that consolidation of wealth is continuing to happen and leaving more people behind. That's just the financial view. Then if you look at technology and the jobs and everything else, it gets, more extreme. So I think we need to try all kinds of new forms of disruptive financing to see if there are different opportunities out there that work for some of the original goals I think we had in capitalism to serve more people.
See, maybe your entrepreneur in Africa who's having trouble raising money just needs to tokenize, right?
Exactly.
There you go.
That's probably it.
In my experience, we are looking very closely into this because on the example I mentioned about, for example, the platform, is that the traditionally perceived risk of social investing and micro investing is very high in our industries. And the transactional cost of those smaller transactions is too high as well. I believe, I don't know enough about blockchain, that my instinct and what a little that I know feels that this is the answer for capillarity at the right cost at scale. I think that's what it brings. That's what speaks to me. And I'm committed to learn a lot more about this.
Yeah. I would say also, it really does remove the middlemen, we might say. And particularly in development financing, I think a lot of people don't understand how much of development funding goes to consultants and to the layers between the government and those receiving the aid on the other end. If you could unleash those additional dollars so they don't flow through middlemen, we could potentially double our impact, in aid funding across the world. So I really think the power and potential of it is not well understood by most, but it's quite great if it all works out.
Thank you. Thank you all for your great contributions and also for the work that you've done. And Jean, the network map is truly, I would definitely also encourage all of you to check it out because it's an amazing kind of interactive map. So I run a startup called SeaChange, really also looking at the tech infrastructure and also these innovative ways for thinking about measurement, validation, but also connecting it to the stories. Because at the end of the day, as you were saying as well, that's where it starts. We did an analysis of platforms that are out there. And within weeks, we had over 200 platforms that are operating.
Which organization are you with?
I run a startup called SeaChange. I used to lead impact investing at Monitor Deloitte before. So really looking across the space and started the startup just because the system is broken. That's basically been our conclusion. So you see all these different platforms out there, and everybody's trying to build their own little islands in a way.
Yeah.
And so I guess my question to the panel is both and I think blockchain is part of the solution there, but where do you see the interoperability discussion happening? And I guess related to that, where do you see the tech leadership happening? Because we've been looking around the SDGs as well around to find these leaders to both carve out the roadmap and to bring the accountability to that roadmap alongside as well. And we actually have not found the leaders or the people paving the way and outlining the way in that.
Yeah, how do we advance coordination?
Yeah, so, you could say more is better because it's early days and, things are going to bubble up and hopefully standards will emerge. I don't know. I don't feel like there is a standard, to your point today. Also following, the SASB efforts that are going on, a little bit like FASB worked in the accounting world. That may play an important role. But at the end of the day, another hat I wear is as an individual investor, and I have a portfolio that I have been taking to 100% impact across all asset classes. And, I routinely sit with my advisors and say, they'll bring deals to the table that are called impact, okay? And you say, okay, well, what is their commitment to measure and report on the impact side? And they'll literally carry the sort of cloak of impact with no measurement commitment. And I would say, really until investors start demanding that, we're just not going to see it happen. It's just the bottom line. And I, unfortunately, I don't think there's a standard, but I see lots of hope with SASB and with a few of these platforms that I think are getting traction. But I think we're quite a bit away from one standard.
I think we have time for another question, if there's something in the, someone here.
I have a feeling I may have not paid attention to the last question, so this may be related.
Okay.
I apologize, but when both of you, Jean and Marcelo, talked about the dashboards that you use for whether to invest or not, what jumped to my mind is, can that be democratized? Meaning, if I'm a consumer or even a small investor, is there an easy way for me to distinguish companies based on, some attributes other than financial return? Just like, you go to a store and you see the ingredients on a product, and now people actually look at that. And I'm just wondering if there is a movement towards making this sort of a day-to-day decision by individuals on what to buy and what to invest in.
So yes, I think there are these emerging standards and platforms. Nothing has risen to the top, as we just said. But, we have some demographic shifts taking place across society. One is the millennial generation, who we know to be extremely conscious consumers. We're finding are also extremely conscious investors. So they are demanding tools as well to say, well, gosh, if I have a choice between 3 products, who are the best, the best options here for the things that I care about? Women, similarly, between millennials and women, they are set to control 40 trillion in assets in the coming years. And they are conscious consumers today, and they're conscious investors when they inherit money or when they make their own money. So I think this is going to drive a series of more consumerized standards. But I'm hoping also, we used to have this thing in the U.S. called the Good Housekeeping Seal of Approval, that back in the day would separate one product from another to say, this is a really good thing. And the question is, will we have a good housekeeping or a good impact investing seal of approval for the companies and for the things that consumers make choices on? I don't know. I hope so. Well,
certainly the map and the networks that the 3 of you have begun to develop that's the foundation. I think, for that ultimately. And I'm afraid we're going to have to leave it there. But thank you so much for coming, and please give a big hand to our guests, Tanja, Jean, and Marcelo.